Hi, my name is Billy Bray. We specialize in building captive insurance programs. Now, we're going to talk about how to do this. Maybe you qualify, maybe you will in the future. A lot of times we'll take a client that doesn't right now qualify, but we'll put them on a 2 to 3 to 5 year track to go and build and grow into a captive. Now, it depends on your level of premiums. It depends on how well capitalized you are, and also what we kind of call your stomach for risk. So your risk tolerance, right? So if you just want to pay a premium and you just want to pay an exact amount and you know your claim is going to be paid, and maybe you don't have a ton of funding, maybe your business is not super big at the moment, maybe you're running low on investor cash, might not be the right time to build this. If you're spending more than $500,000 worth of premiums on insurance, you've got some capitalization, you've got access to capital, whether debt, equity, investor, might be something to consider. If you're aggressive and you're upset with your insurance company, you're mad at these rising prices, it's a good conversation to have. The timing might be right. Maybe it's just we work with onboarding approach of the first year or two or three before you grow into that. Maybe we start raising funds and we take your deductible from 100,000 to 250 to 500 to a million over the course of 3 or 4 or 5 years, and we fund this lower layer that you're self-insuring. Essentially, a lot of people get confused on self-insuring. Like Texaco, they have a huge deductible. When it's a big deductible, they call it a self-insured retention. Nobody truly self-insures unless you're just reckless and just don't buy insurance, or you consciously just don't buy a certain piece of insurance, right? Texaco example, they have a huge captive that basically funds their deductible. So if their deductibles, I think last I checked, 14 million, then anything underneath that would be self-insuring. So they're self-insuring that, but they've got insurance sitting on top. So in your business, say you want to fund the first $1 million, then you build a captive for that first $1 million layers of risk or exposure, and that's on you. So you can build, if your company is ABC Real Estate Investors, then you build ABC Real Estate Investors captive insurance business. You capitalize it up front. You go through a feasibility study with attorneys, actuaries, and risk managers. We do all this in-house, by the way. And you go through this process and they build you a nice feasibility study chart, graph, and there's a bunch of numbers and a lot of math involved. There's something called a loss pick. There's a lot of charts that shows how much premium do you pay yourself, what's the estimated amount of loss you're going to have that year, 3 years, 5 years, 10 years, how much money does the captive accumulate, and what does that do for your taxes? Now, we're not tax professionals, but our actuaries are, and they will help you through this. I'm not a legal person, but our legal team is. So we build this team for you, and the feasibility study is usually about $40,000 to $50,000 all said and done. So it's not cheap, but if you're mad about buying current insurance and with the prices rising and things like that, it's sometimes a really good use of investor dollars or capital to get on this path, because the 3 to 5 to 10 year time horizon versus having an insurance policy that goes like this, you're going to cap it out right here like this. The trend's going to go down. The increases are going to be self-sustainable, and you pay yourself versus the guaranteed cost world. It's also a lot more strategic, and I call it top of the food chain, sophisticated buying of insurance. Now, it's the opposite from just buying cookie cutter insurance, and it's kind of more advanced than having even a master program built. Very important to understand the implications of this. Say first year, you have a $2 million claim, and you have insurance at the $1 million level, but none for the first million. You're going to be on the hook for that first million. Your captive insurance business that you own will pay that first million. But say you go 5 years with no claims, you have all of this insurance premium you've paid yourself, and that's an asset to your business. So there's some downside, there's some upside. If you are willing to take some risk, you've got access to capital, and you think that you can control your costs and your risk better than your average peers that you're buying insurance with in the marketplace, let's have a conversation.